Welcome to Apartment Syndication Made Easy podcast, where we simplify the world of syndication. Join us as we unravel the complexities and provide you with valuable insights to help you invest smartly. Get ready to take your investments to the next level, one episode at a time. Here's your host, Mr. Vinney Smiles Chopra.
Hi there, guys. This is Vinney Chopra again. Back again. I hope you're liking the content. As you know, I wrote the book, Apartment Syndication Made Easy. That syndication word has changed my life. I mean, starting from a duplex and still own the duplex to 14 units or whatever for $180,000, buying $63 million deals now. I mean, you could do it too. You can do it too. Follow, like, share this episode if you really like the content. And I've got a really great friend, Paul Thompson, is in the house from Little Rock, Arkansas. Hi, Paul. How are you?
I'm fantastic, Vinney. I'm going to try and do my best to live up to your energy.
Hey, brother, I'll be 71. My wife says, wow. No, you're only 70. I said, you're right. My mind, I say I'm 75. So that, no, I'll be 71 in August. I love chocolates, Godiva chocolates, guys. Anybody wants to send? No, I'm just kidding.
You accept gifts, huh?
I just, love life. I mean, that's the name of the game. You got to love life. You got to be totally cool. You got to be, I'm telling you, this is Vinney Chopra. This is what you get, brother. You got to love what you're doing. But the thing is, nothing bothers me. In life, nothing bothers me. And that's the key to success. We're going to talk about a lot of cool things. But let me introduce brother right here. And Bo also, Vinney and Bo show. I do it 9 a.m. tomorrow morning, which is Friday morning. And I do Abundance Mindset with Vinney Chopra and Walter Amarello on Thursdays at 9 a.m. So that keeps me busy. I love it. And I teach also in my academy and all. But let me talk to you, Paul. Paul David Thompson is the #1 best-selling author, full-time real estate investor, coach, hard money lender, husband and father. And also he's the host of My Freedom Foundry podcast and the founder of the PDF coaching and consulting. We're going to dig into that. With years of experience in guiding beginners and experienced investors through the process of doing real estate investing deals, he's also mission to help purpose-driven men and women, entrepreneurs, break the corporate drone. Oh my gosh. Break those chains, the shackles, the rat race. I'm so glad to talk to you, brother. We're going to have fun. Cycles and achieve success they desire. I believe that you believe that, every successful person got where they are following the advice of someone who went before them. So true. I mean, don't go after naysayers. Don't go after all these mentors and coaches who have never done nothing in their life, but they want to teach you. Don't go after them. And I want to be that person for you. That's exciting, brother. So tell me if you would. Oh my gosh. Otter data is a little bit, Otter is a little bit slow. I don't know why. She should come early. Miss Otter, come early. But again, it's not going to be in the show. It's going to just transcribe our episode and all. But who is Paul Thompson? Tell me about that, brother.
Well, I'm a former corporate drone turned entrepreneur, real estate investor, and somebody who just has a mission now to help the general population wake up and realize that most of us are asleep at the wheel, and it is entirely up to you to live a life by design, but no one's going to rescue you. You've got to do it yourself.
You're so right, brother. I say that in my podcasts also. We are alive, but we are dead when we get up in the morning. Right. How many of us are totally dead when we go in front of the mirror and we say, no, I don't want to get up. I should hit that snooze button or things like that, right? We need to be excited about life because each day is a birthday for us. If we are alive, if we are breathing, it's a birthday, not one day a year. It's every day, So no, thank you. You're so right. I mean, we got to be passionate about even whether you're 70, 80, 90. I mean, my wife was, sharing with me, like, she plays bridge. I play bridge also. But 100-year old people in Danville, California are playing bridge. 100-year-old, listen to me, playing with the cards and have so much speed because they have kept their mind right, body right, eat right, they're sharp. So no, thank you. Thank you what you're saying, because it's up to us to cut down the shackles and get out of the rat race and take time making memories with your family.
What else is there? Are we here for? Like, if we're not here to enjoy the people who we hold most dear, why do we spend so much of our time renting our time out to a corporation that doesn't give a shit about you?
So true, brother. So true. So true. No, I totally agree with you 1000%. So tell me more. You grew up in Arkansas, or how did your journey start, and where you are now, and where will you be going?
Good question. So I was raised in a very happy household, but we were not well off. My dad is a Baptist preacher, and my mom was an Avon lady. And so I had a very salt of the earth upbringing, and they instilled in me a lot of family values that I still hold dear, and a good work ethic. And this, they told me, like, you're going to college. That was never on my, never a doubt in my mind that I was going to go to college. The problem is they were following an old school's piece of advice, right?
Rich dad, poor dad kind of philosophy.
Exactly. Yeah. I mean, they were really good people. And they did not have financial sophistication. And like most people listening to this, your parents probably didn't either. And you're certainly not taught it in school. So some of us stumble across this in life. And it took me 15 years into a corporate, a career, that I kind of had this really big wake up moment, Vinney, that I just like, oh my gosh, I asked permission to extend my vacation one year, and my boss said, like, what are you talking about? You need to get back to work. Yeah. And I had the money. My wife was a stay-at-home mom. My kids were out of school for a summer vacation. Like, there was nothing limiting us to extending a vacation. Except for my boss said, no, like, you need to get back in here and get your ass to work.
Oh my gosh.
And that really pissed me off.
A lot of people listening to us, guys, in your car, in your office, I bet you have come across this. I mean, this is common. You know, we are producing 11 times more for the employer, and we get paid one time. 10 times they keep it. It's up to us to really get out of the shackles. Go ahead. Sure.
Hi, you are listening to Syndication Made Easy podcast. We will be right back after this short break.
Hi, thank you so much. This is Vinney Chopra, and thank you for subscribing to my podcast and YouTube channel and Facebook pages and all the great things, and LinkedIn. Connect with me. I come live to you every Friday at 9. Over 1,000. Made Easy, the book I wrote a couple of years back, became international top seller on Amazon International now. And then we like to bring great guests for you every week, or twice a week sometime, to give you a lot of great knowledge. So please subscribe. You give us 5-star reviews on the iTunes. The better the guests we can, bring, and our ranking will go higher also. Thanks again for following us and really getting the most out of it. Please comment, like, share, because we would love to bring better and better material for you.
Yeah. And that really pissed me off. And I was like, I've been working so hard for this company. I mean, it's not like I was a newbie. I'd been in the company for many years. I was in middle management. Like, I had employees reporting to me, and I was a really respected and liked middle manager in the company. And you can't even, not even a conversation. It was just like, get your ass back. And I was like, I've got to figure out something different. And I'm actually very thankful about that experience, because it was the wake up call that I needed, that said, okay, I got it now. I finally woke up and realized that I was had my ladder against the wrong wall. Like I realized I was helping somebody else build their dream instead of me spending my time building a dream of my own.
I'm so glad you said that. Oh my gosh, the ladder along the wrong wall. How many of us, millions of people in USA, abroad, every country, we are building this wall, this ladder. It's the security. And in my case too, by the way, I did very well in my corporate, my stocks went 6,700% with private company, all that stuff, which is fast. But if I had really taken time out, I'll be 10 times bigger, literally. And that's what's the right thing. Anybody listening to us, check your ladder. Check your ladder. Who are you making rich now? But you could change it, right? Paul, you changed it, brother. I changed it. Well, I retired. I was just interviewing right now, a little while back. I left my retirement in 2015, even though I've been icon in real estate for 40 years. But it was side hustle.
Yeah.
But when I retired 15, I took off like crazy. I wish I had done that way back
earlier. Yeah.
But tell me more. So you are into, what's your core, I say, your power moves. What do you do now and how you're able to bring value to your customers? Who are your customers and how you're solving problems? Yeah.
Well, now that to transition the conversation, like fast forward through everything, I jumped on single family and realized, okay, like I really want to scale. I need to go up to commercial, do multifamily, and I couldn't find deals. So I started doing developments and building my own deal. Right. And in that process of learning that, I realized that I really like the corporate financial structure and raising money part of the business. So if you're doing syndication, you know all about raising money. And I really, really like that because I get to connect with people who don't have the time to go and build a company, but they have the capital. They've worked hard, and you're not going to become wealthy renting your time. You need to buy equity in something. Right. And so I like finding an opportunity for people to find equity in deals. And so now I'm a fund manager and I deploy other people's capital inside of my fund in real estate assets.
I love it, brother. Oh my God, you're talking my language. We got to go and maybe we will even talk more. I'm just looking at our head here. But you know what? I just started $100 million fund last week. I got the
Did you really?
draft. Just on my desk. I've done 50 million before. I've done many, many funds. I've raised 222 million so far.
Nice.
Now I'm going for 100 million. And by the way, I'm not selling any security to anybody or anything. It's a 506c fund. It's going to be diversified fund, which is going to have hotels, multifamily, storage units. It's going to have land. It's going to have senior living, which I'm building, all that stuff, right? Bitcoin mining. It's going to have startups, IT. So my syndication attorneys have given us a whole shebang, a business plan, which we'll be able to put into. So no, we are talking my language, I'm talking your language. Let me ask you a question. What can you and I do to teach passive investors?
So I think the concern that passive investors have probably should go in this order. Okay. It is what is my risk profile? And what kind of return am I after? And I think a lot of people sit on the sideline waiting for this grand slam deal. They're looking for a 25% return, and those aren't common. And they're losing so much potential earning on their capital by having it sit on the sideline and hoping and wishing and thinking. It's along the same lines that several of us have done in the corporate world. We spend our time hoping, wishing, and thinking that we're going to build a business someday. But when we actually develop and save some capital, we do the same thing. And you want to get your money to work, and you want to get a consistent base hit over and over and over again. And as you gain sophistication and you know how to evaluate a deal, then you might be able to find that operator or that sponsor who has that 1 in a million or 1 in 100 deal that gives you this amazing return with this great equity multiplier. But for the most part, those aren't out there, and those aren't those are pro forma outcomes, and they're not promises. So you really want to have a situation where you have your capital deployed, getting consistent returns, like they're hitting their prefs, and the ability to exit. I think a lot of people get into syndications that sound good, but then when there's an economic crisis like is developing right now, and there's people that they're not hitting their prefs anymore.
Yeah.
And so they're getting, maybe a 6% return if they're lucky, and they've been trained to believe that they're going to get 25% every year, and that's not reality in most cases.
Not reality, brother. So true, so true. No, what you're saying, Paul, is so true, because my investors have gotten, and yours is up to 20, 30, 40%, by the way, IRR.
Right.
Those days are gone. I mean, the property values, and it's been a seller's market with interest rates where they are now, and the insurance rates. Oh my gosh, the property taxes. Those are the three biggest, detriments to cut down the, cash flow. And a lot of people were really banking on increasing the rents like crazy. That's shut down. Four things are against all these projections, performers. So I think it's so good what we are talking about today, because expectations of, and a lot of people lost 20% in the stock market last year. I just found out, got the K1 yesterday, 422,000 I lost myself in the stock market, brother.
Yeah.
I'm still laughing because, when you make money in real estate, and you lose money, what can I do about it? Nothing.
Right.
All I can do is vigilant and not put too much money on the market, and the stock market. Nobody can beat the market. Anyway, but the thing is, real estate will never go down to zero. But you should work with somebody who's got track record, who's done it, who's done the cycles. We call it market cycles, right? And who have conservative underwriting and conservative assumptions, and not giving you pie in the sky. I just got a project yesterday, 26.11% IRR. Are you crazy?
Yeah.
No, they are not there. They're not there.
And an equity multiplier of 2.8.
Multiplier of 5 and 4.
A 5. Whoa.
I know, I saw this. I couldn't believe it. I said, are you crazy or what? Anyway, this one big developer went bankrupt. I think he collected, I heard, billions of dollars or something like that, or maybe 500 million. And he went belly up, right? In California, I heard. I mean, and a lot of my friends invested in that because they're advertising on my channel, Indian channel.
Right.
And, people are always, when people are telling you, high returns, it's too good to be true. Too good to be true, Dipal, But the thing is, if you can get 6, 7, 7.5% right now, cash and cash, we call it, or pref, and then with a conservative, maybe another 7 more, maybe 6 or 7 more, maybe with equity multiple in 5 to 7 years, per year. That's the maximum you can get, literally,
Yeah, that's exactly. The numbers that you said are almost identical. Like, I'm looking for a 12% return, double my money every 5 years, and that's good enough. Like,
totally.
And again, keep in mind, a lot of people who are using this, they're accredited investors, right? So they're deploying in multiple projects.
Yes.
So I think it's interesting to, when you're deploying, say you have $1 million of capital to deploy, don't put all $1 million into one fund or one project. Never. Yeah. Spread it out and find some operators that show track record, that show a consistent level of communication back to you. Totally. And that when things don't go to plan, they don't ghost you. They continue to talk to you, right? Yeah. Because things are going to happen sooner or later. Like it's everybody has a bad day, and how do they handle that bad day is what I care about as an investor.
For sure. That's fantastic. Let's go into the retirement funds. Would you like to teach some people listening to us? Could be passive investors, could be syndicators, What can you share in retirement funds? Why should they self-direct?
Sure. So I'm a big fan of self-direction. So for those who may not know, if you have an IRA or an HSA or a Coverdell educational savings account, these are accounts that you can elect to self-direct. And what that means is that you put it into a certain type of custodian that gives you access to alternative investments. Most traditional custodians do not allow you to invest in anything but public markets. Yeah. So these are the legitimate companies like Vanguard or Schwab, all these companies. They're legitimate, good companies, yeah. And they're just giving you a suite of options. Well, these small boutique companies like Quest Trust Company or Millennium or Equity Trust,
Advanta,
Advanta, right?
There's Premier, all these, right?
Yeah, right. There's like 10 of them out there that are really big.
For sure.
And they're still, in the scheme of things, assets under management, very small compared to the big companies, the big custodians, and they're like boutiques, and they specifically allow you to have access to invest in things like syndications or promissory notes or gas wells. I mean, all kinds of stuff. There's just a few things you can't invest in,
machine,
right?
Storage unit, laundry mats. I know all kinds of things.
The list goes on and on, right?
Yeah.
And so these are opportunities for you to put some of your capital into alternative assets other than public markets.
So true, so true, so true. And the tax benefits, let's hit that hard also in this episode.
Right.
That's a big one. Yeah.
Right. So the whole reason these accounts exist in the first place is to create tax advantages, right? So if it's a Roth, then the acorn's being taxed, but the oak tree's not, which is my favorite type of account because I believe we're in an environment where taxes have to go up sooner or later, and they're going to tax us more over time. And as you age and you start having to take RMDs or you're having to take money out to live off of, you don't want to pay taxes on it at the new rates going forward.
For sure.
And so there's another account that I think a lot of people overlook. Which is what they call the health savings account, the HSA.
Yes, HSA. You mentioned it. I've not been saying that, brother. I'm so glad. I'm learning from you. I'm telling you, HSA is huge. You could do it. And you could pay for the invoices or something. My son was sharing with me later on, whenever or something.
Let's walk it through. So a health savings account is similar in concept to an IRA. It's a special account that you can contribute to per year if you meet a certain kind of qualification. So for you have to have an HSA qualified health or a health account, health insurance plan. And if you have a high deductible HSA compliant health insurance plan, then you can put up to, I think it's $6,500 per year per family into that. And it's triple tax advantage, meaning that the money you put in is tax-free, the money that grows is tax-free, and the money that you pull out for qualified medical expenses is tax-free. Yes. So what you were just talking about was this is not a use it or lose it like a flexible spending account. This is like an IRA that you can invest. You can put it in the stock market, you can put it in cash, or you can do alternative investments with it. And as it grows, you can let it grow to, $100,000, $200,000, whatever your goals are. And then you keep your receipts for all your medical expenses over the time, over 10, 15, 20 years, and then take the money out and pay for those expenses retroactively. So you're reimbursing yourself over time in future dollars that have grown tax-free.
Much cheaper dollars, brother, there.
Right.
And the money, HSA can be making you more money, maybe doubling, tripling, quadrupling money, right?
Yeah. The one concern to think about is if you are really good at running these self-directed accounts, is that you don't want it to grow too big because there's a certain, like you take the money out tax-free for accounts that are for qualified medical expenses, right? So let's say you put in, you grew it to 500,000 and you only have 300,000 on expenses. Well, the other $200,000 is taxed pretty heavily. So you want to be careful. You don't want to grow it too big. So
does it become ordinary income then, Paul, the year that you want to take that, just like Roth IRA?
Yeah.
Right?
I don't remember actually what happened.
Don't worry.
Yeah, I'm not a financial advisor.
CPA, I'm not CPA attorneys. Guys, please check it out on
seek
internet.
Your people out. Yeah.
So let me see, what are your superpowers? If something you would like to leave the audience with 3 action steps, what would you say?
It's an acronym called LIE. I like to lie every day. L-I-E.
L-I-E. Okay,
Yeah,
I
L-I.
like it.
So,
I don't like to lie, but
right.
with this acronym, I'll believe in it. Tell me more.
Right.
Yeah.
So L is to learn, like always learn and constantly invest in yourself. That's a common precept that everybody who becomes rich or successful is they are consummate learners. They always are always learning. And this is in a world where our lives are changing constantly, faster than we keep up with. And whoever learns the fastest has the best advantages. And then I is to invest in yourself. Do something to where you're actually creating equity in something that is creating compound growth.
Yes.
And then the E part of lie every day is to enrich somebody else. And then at the end of the day,
I'm going to put it up. L-I-E.
And then at the end of the day,
about it also. I'm going to write it down
there's
here.
A really big
you taught me something. I
takeaway
appreciate
here at the end, Vinney, is at the end of the day, when I lie down in my bed every night, which we're all going to do, I ask myself, did I tell a lie?
Learn,
so if you lie every day,
yourself, and then enrich. Empower others.
Right?
Enrich. Yes.
Empower would work as well.
I love it, brother. Oh, this is amazing. How can people reach you? Paul, you have really enriched my life, bro. And everybody listening, hey, if you like the content, please share it with other people. Give us 5-star reviews, because iTunes really bumps it up and we can get great guests for you. Remember to really like and go to my YouTube channel, my Instagram, TikTok, Pinterest. I mean, everywhere, my new blogs and all those and everything. So go ahead, Paul. Yeah.
The best place to find me is my website, pauldavidthompson.com. All of those things are spelled about the way you would expect them to be. And I'm similar name on most socials.
Paul David Thompson. Thank you so much, Paul. It's such a pleasure to know you, brother. And you have a blessed day. Thank you so much for what you're doing. Really showing the passive investors, accredited and non-accredited, because we can do 5 or 6 Bs and Cs, as you know, through Regulation D, which I teach. But the big thing is you're giving them, empowering them to invest and make good returns, not spectacular. That's what, those times are gone. But let's learn and preserve your money. Preserve your money. Make sure you give your money to the right fund manager, like Paul David Thompson or Vinney Chopra. We have done well and everything. But thank you so much. We'll see you next episode. And there we go. Thank you again, for joining Vinney Chopra this week on this podcast. And please subscribe, share, give comments, and give 5-star rating if you can on iTunes, because that really helps a lot for us to bring great guests. And also iTunes raises our rankings up. And I hope you have been very happy with Vinney Chopra and team, who are able to bring great information. If you would like to invest with us, please go ahead and go to vinneychopra.com/invest. Thanks again. God bless you.